Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, the stock market's still booming, right? S&P above 6,000. 6,000. That's amazing. You see, we have a lot of complacency in this market. There's no fear whatsoever. Everybody's convinced it's just going to keep going higher and higher and higher. And so far, they've been right? I mean, literally, we've had, what, a 16-year bull market, right? And we're not going to get a bear market. I was listening to this one guy over the weekend. He says we're not going to have a bear market for another 6 years. You're going to have to wait till 2030 for the next bear market. We're just going to go up until 2030. Interesting take, right? Now, the gold getting slammed today. I'm going to get so many of those haters. There's a lot of people out there that hate the gold and the silver market. Mike, you got it all wrong. Look, I told you gold's going to drop. It's dropping like a rock today. It's an opportunity. I love this. Now, I think gold's going to come down to 2,500, right? We're a little above 2,600. We were above 2,700. We had a pullback, and I think the pullback still got a little more to go. But I don't know it's going to get down to 2,500, so I am starting to buy these dips. You see, you never want to be all in the marketplace at one time. You want to have what's known as dry powder. Cash is an actual position. Now, Warren Buffett, he's got what, 300 billion in cash waiting for the opportunities. Now, I think the opportunities came today. I mean, we got a little bit lucky here in the miners, gold mining stocks, silver mining stocks getting crushed, and they're already a bargain, but now they're really a bargain. So I've been picking up a few of those today. That's very exciting. The GDX coming down. I think the GDX might have another day or two to the downside, but it's getting to where you want to start to invest again. Once again, you got to do you. I got to do me. Now, I'm a gold and silver guy. You look at that Bitcoin market, man, that thing's booming, right? Donald Trump, the Bitcoin president, he's going to push that to $1 million of Bitcoin. We're over 80,000 now. Hurry up and buy that before it gets to $1 million. Not my take, right? My take is I'm a gold and silver guy. I'm a real money guy, right? Now, a lot of people say they would never buy real money, right? Because this one guy, he tells me it's going to go to $3. Silver's going to go to $3. That's going to be fabulous. Man, that's going to be great. But anyways, he would never buy it because it's manipulated, right? It's manipulated. For every 1 ounce of physical silver, 408 ounces now. It keeps going up. They keep slamming this with the paper silver, right? That's how they slam the market. Same with the gold market. You can slam it with the paper. And they want to let that Bitcoin run, get people out of the real stuff, get people out of the gold, get people out of the silver. Look at Bitcoin. Get in there. 81,000, right? I'm taking my chance over here. Now, I do think the gold will come down to 2,500. I'm hoping. The guy that says we're not going to have a bear market for the next 6 years, he says we're going to come down to 2,100. 2,100 would be a really good buy. It's possible, I suppose, but I'll be picking it up down here. I'm already starting to pick it up. I'm a stacker, right? I started stacking this at, 300, and we're now, 2,600. We've had a little bit of a pullback, a little bit of an opportunity. I hope we get a little more opportunity down to the 2,500. Now, a lot of people, they think I'm an idiot, right? I'm short the Qs, and everybody knows that I have a small short position on the Qs, right? A stupidest thing you could do, Tall Mike. Well, I am down about 3% on those, and I'm going to live with that, right? If it gets down 5%, I'll take those off. I'll even let you know when it gets down 5%, and I'll take that position off. Every trade does not work. This trade still could work out. Everybody tells me it's impossible, that the market's only going to go higher from here. And they may be right? We got the Donald in there. We got a lot of hope going on in this nation, right? A lot of hope. Now, over the weekend always happens on Friday, right? We had another bank failure. Another one bites the dust. Another bank went down. Well, actually, technically, it was a savings credit union, not savings loan, credit union. The credit union went down. Now, I used to think, I still think that credit unions are a little bit safer than banks, but they don't do as much gambling in the derivative markets. But where this credit union went down was Florida. Alliance Credit Union of Florida went down, was placed into conservatorship, right? It's still going to open today, and people will be able to get their money all below 250,000. They're not guaranteeing anything above 250,000. So above 250,000, I don't think you're going to get your money. That's just my take. Below 250,000, it's called the National Credit Union Administration, right? Okay, they're the ones like the FDIC. They're for the credit unions, though. And the credit unions, once again, you're guaranteed up to that 250,000. But this credit union went down. It's only $59 million, so you're probably not even going to hear about this in the news because they don't like talking about when the credit union or a bank goes down. They kind of want to push that to the side. Soon we're going to have at least one a week, maybe 5 or 10 a week, going down, going under, because they're in a lot of trouble, the banking system. But this one, they went down because of auto loans. Credit unions, they do a lot of auto loans, right? And people went out and they borrowed all that money during the pandemic, right? I mean, the stickers on the car were 60,000 retail. People were coming in and buying them at 95,000, 60,000 retail, but they were paying 95,000. And of course, the credit unions were the ones giving them the loans. And now the people aren't making the payments on those loans. Why? Because they're caught so far underwater, they can't do it anymore, right? They can't make the payments. So they're delinquent, and that's where this credit union got into a lot of trouble. And now they took it over, right? Because they were going to go under. And they don't want the credit union to go under because they're guaranteed up to the 250. So they got seized on Friday. On Friday, that's always the banking takeover day, right? Gotta love that. But another one bit the dust this weekend, but nobody's going to talk about that. Look at the stock market. Look at Bitcoin. It's going higher. They're both going higher. Keep looking at them. Don't look at the bank failures. The banks are in trouble, though. They're in a lot of trouble. Their balance sheet of the regular banks. Okay, let's talk about what would happen. What would happen if, I'll just throw in a name out. Let's call it Bank of America. What would happen if Bank of America was seized on Friday and today you woke up and all of a sudden you got zeros all across your accounts? What would happen? I'm not sure what would happen. Would you feel comfortable being in the banking system? Would you feel comfortable? Let's say you were at Wells Fargo. You weren't at B of A, but B of A, you go jiggle the door and the door's locked. How are you going to get your money? Well, they're going to get it to you, but they got 4 years to get you your money back. Do you know that? Can you survive for 4 years without your money? I don't know if you can. But let's say what would happen to the other banks if a big bank went down. Well, I think there'd be a lot of bank runs. This is just my opinion, and I don't want to scare anybody. But I do say only keep as much money in the banks as you're willing to lose. The banks are in a lot of trouble. Now, why are they in trouble? Because they don't have your money, right? You went and deposited all your money in the bank. The bank took that and they went and bought these treasury bonds, right? Okay, well, those bonds went down by 30 to 40%. That's how much of your money they've already lost, right? Now, there's this black swan, and everybody can see this black swan. So it's not really a black swan because black swans, they can't predict them. But this one you can predict. Look at the commercial real estate paper. Commercial real estate paper owned by the banking system, right? Now, a lot of these buildings are sitting empty. Many of them 50% empty. Some of them 80% empty. Some of them are completely vacant, right? So they're not getting the rent money that they used to bring in. So these people, the landlords, they're not able to pay their loans to the banks. So the banks now, they still have these loans. Let's say, just an example here. Okay, let's say it's a $100 million building, right? Okay, and now it's maybe worth 40 million? Okay, 40 million, but the bank has an $80 million loan on it, right? So the bank keeps that loan on their balance sheet at full $80 million, right? But they can only get 40 million for the building. Well, they're in trouble, right? They're in trouble because the person is not going to be able to refinance. Now, these commercial buildings, they refinance them every 5 years, and a lot of them are come and due, and the bank's not going to redo the loan, right? But so what's going to happen? Well, that person, landlord's not paying, gives the keys back to the bank. What does the bank do? They now have a building, but if they sell the building, oh man, they'd have to write that loan down. They'd have to take a $40 million hit. Now that's just one building. There's thousands of these buildings that they're holding, right? And so they aren't marked to market. If they had to mark to market, all these banks are insolvent. All these banks are in trouble. But here's the thing. If they get a bank run, if you want your money back, they're going to have to start selling some of their assets. And their assets are way, way, way underwater. And now people are going to start sniffing this out. They're going to start smelling something funny, right? It's not going to be pretty when the banks have these runs on them. The banks are going to have these runs on them. And the FDIC, they don't got the money. They use the money, right? Silicon Valley Bank got all the money. They insured all those people that were over the $250,000 limit, which in my opinion was an illegal thing to do. Now, look at, I'm sure if you had over 250,000 in Silicon Valley Bank, you're very grateful that you got your 10, 20, 30 million dollars back, whatever you had in there. A lot of the big venture companies had their money in there, so they had to bail them out, right? But this poor little credit union in Florida, that $59 million, people over 250, they're not going to get a penny above 250, right? So they're, once again, that's a form of a bail-in, right? And we got the bail-in into Oklahoma one, Lindsay, Oklahoma. They're bailing in at 50 cents on the dollar. The bail-ins have started because they don't have the money to give you anymore. They've spent the money, right? So this thing is, like I say, just keep as much in the banks as you're willing to lose. So, I mean, that's my motto. I'm sticking to it, right? The banks are in a lot of trouble. So they're underwater with the bonds, with the commercial real estate, with the car loans, right? Car loans, that's what did this credit union in. So they're underwater. They've lost your money. So what are they doing? Well, the banks are taking what little money they have and they're going to Vegas. They're putting it on the roulette wheel. Bet red, bet black, red or black. You know, they're doing the gambling. Now, they're not literally going to Vegas. They're gambling in what's called derivatives. Now, the derivative market sounds all confusing, right? It's very simple. It's just a bet on top of a bet, on top of a bet, on top of a bet. And these are not regulated, right? Let's say you have Apple stock, right? Let's say you have an ETF on Apple, and let's say it's a long and short ETF, and then you have double ETFs and triple ETFs, and they're bets on top of bets on top of bets. And this whole thing is a house of cards waiting to go down. You get a bad month at the casino and a lot of these banks go under and they're going to start to fall. I'm saying one a week, could be 5 or 10 a week, could pick up the pace, but we're going to lose hundreds and hundreds of banks. FDIC, they come out and they already say, look, we know of 80 banks that are going to go out of business. Well, could you give us the names to those? No, they can't give you the names. You go take your money out. There'd be bank runs. They can't scare you, right? But they know, they openly admit that 80 banks are in trouble and going to go out of business. But they're taking the money, they're going to Vegas, and they're, you know, if they lose the money, it's all over. The whole system comes tumbling down. Now, a lot of people don't understand. Mike, you talk too much about the banks. The banks are tied to everything. They're tied to the stock market. Stock market's not going to be going up when the banks are crashing. Real estate's not going to be going up when the banks are crashing. It's all going to become tumbling down. Now, me and you, we're going to get hurt. But the billionaires, they're going to be fine. Do you realize, look, like just since Donald Trump was elected last week, okay? Anyways, the billionaires have already added billions on top of billions on top of billions to their money. Now, Elon, right? Elon, he was giving Trump, what, 40 million a month, $80 million, I think he gave him, something like that. I don't have the exact figure, but he's already up 10 extra billion dollars. You see, Tesla stock just took off, right? Because he's close to the money. He's close to the president. He's locked in, right? It's called the Cantillon effect. The one's closest to the money, and the government has the printing press, right? Elon's getting close to the money, and that's how Elon's going to become the first trillionaire. And I like Elon. I don't have any problem with that. He's a smart businessman. Get close to the money. He understands it. You see, he made money. His whole fortune was made off of the government, right? The subsidies for his Tesla cars, if the government didn't pay the subsidies, Elon might not even be a billionaire. But he's a very intelligent man. He's a good businessman. He sees it. So you get close to the money. My point point is all these billionaires have already increased their net worth, billions on top of billions on top of billions. Now, how much has your net worth increased since the dollar's been in there? Maybe you're in the stock market. Maybe you're in the Bitcoin. He's making that go up. So maybe your net worth is going up. Are you getting billions, right? Are you going to get into the billionaire club? Now, people tell me, Mike, you get everything wrong. Now, you see, these people aren't that smart to tell me that. If I actually got everything wrong, they shouldn't let me out of their sight. Just follow me, do the opposite, and you're going to get everything right. You're going to get the billionaire club. But they really aren't that bright, right? They just tell me I get everything wrong. Maybe I do, right? I'm short the Qs and I'm long that gold market. Love the miners here. Miners getting crushed today. And it's a good opportunity, right? A good opportunity to pick some of those up, add them to your portfolio. This is just what I'm doing. I'm not telling you, if you don't like the miners, don't buy them. You don't like silver, gold, don't buy it. You want to go out and buy a house, go out and buy a house. I'm just giving you what I'm doing, right? I'm buying gold and silver. I'm buying the miners. I love this pullback. I think we'll get down to 2,500. But everybody else tells me that silver's going to $3. So you just keep waiting for that pullback and see if it gets it. Anyways, if you like this stuff, give me the thumbs up. I'm Tall Mike. Get out there, enjoy the day, but punch that subscribe button first. Bye-bye now.